Yeah, I mean, even if you make a mistake or God, like it's almost like how on what stock do you lose money on as a short? Like you almost have to be unlucky to lose short, almost in this market. I mean, there's just so few that are going up, and unless you're, it's I mean, I say this stuff. You can always make bad. I mean, you short into lows. You're gonna pay for it. Like you short into lows in the middle of the day. That kind of stuff. You'll kind of always lose if you do that kind of stuff. I mean, BTX. I mean, your fault. You shouldn't be trading that kind of crap anyway. Um, like yeah. So of course, there's always ways to lose. No matter what you do, there's always a way to lose. But the normal routes of losing. Oh, did it go up? I kind of stopped paying attention. Kind of stopped paying. It doesn't look. Yeah. Oh yeah. This hot chick here. Oh, this is the one that I was looking. This is. I made a mistake. I've already made a mistake on my PowerPoint that I meant to say this one. Yeah. Yeah. This hot chick, right? Yeah. I think that's what I called it. Like such low standards for a hot chick. But yeah, this was just shitty. Yeah, I mean, I was like, I was like so waiting for this stuff to happen too. I was just like, I don't understand why, like, I'm not really short. It's, I've had such a great time longing these last like 5, 6 months, like ever since October. I mean, October to February was just fucking awesome. And like, there was really no reason to long. And so I've just kind of got in this zone where like nothing's stopping me from shorting. I don't know. Like I just like I just feel like I should just wait it out and just like put my don't start to get into the shorting habit because like I make so much more when I long that it's just like it just maybe not really. Well, it's stubbornness, but just stubbornness to change, I guess. It's more of being stubborn. Like I mean, I just like longing so much better that I'd rather just wait this out. Like, I don't know. It's not the most efficient, obviously, but I don't know. Maybe it is because, like, I don't know. I don't like the taxing effect on your brain when you go back and forth. Like, I mean, like, I'll take a short every now and then. Like, like I like being dominated by one side, and then just like, or predominantly being one-sided, and then you know, you see a good setup on a ticker, then you take it. But I don't know. It's just a lot harder. I think it's just more taxing to just be like, oh, well, let me long today, let me short today, let me figure out if each ticker is a long or each ticker is a short. I'd rather just be long bias and say, nope, not this one, nope, not this one, nope, not that one, or be short bias and just look for my, just kind of have a lens where it's just so comfortable to look through, and it just simplifies it. It's can you make money? Could if you wanted to make the most amount of money possible? Again, like I was just about to finish that sentence with, could you just like short this, short that? But I don't know. Like the opportunity cost of me missing like a super runner because I happen to be short bias on that, I would never want that to happen. So I don't know. It to each his own, I guess. I just kind of I don't know. If we see this for another month, I might consider it. But I ultimately do think that the market will even the score back out a little bit. Yeah, and this market has pretty much been anti me, anti my strategy basically. Like my kind of I never would have dreamed that I would have turned into this, but I've kind of turned into a big move kind of trader. And I used to always be just a routine, no patience base hit, but like now I've turned into the kind of trader where like I'm a breakout trader. I'm a range breaking trader. Um, I go for the big moves, and like I know we always preach don't go for the big moves, but like as a new trader, I would recommend that too. I would suggest that do not go for the big moves, go for the routine base hits. Um, And if you're going for that, I mean, this market is for that 100%. Like this market is a base hit. Don't go for home runs. Don't, expect the range to hold, and it's going to hold. I've just kind of developed into like my wins come from, my big wins, and that's the way I've kind of developed into liking to trade. And so this market has literally just been like, I mean, like plenty, like I didn't trade at all the first 2 weeks of April, like really at all. And in the last 2 weeks I kind of started again, and just it's not that I've been in the green tons of times. I've been in the green almost $1, and I didn't take the money because I just had my targets. Came back and stopped out, break even to red, and it's just constant that. So I haven't had a great couple of weeks, and I'm sure a lot of people, especially longs, probably haven't had the best week either. And so I'm just telling you, you're not alone. This market is really tough. And I mean, and if you're just kind of getting like the short, it was a lot easier a couple of weeks ago for shorts than it is now. There has been some fight back on the short side or on the long side in these last couple of weeks, notably. Like that's why I've been, I haven't just stopped out of nothing ever since. I've been in the green multiple times, which means, I mean, longs have been fighting back. We've seen some attempts, but these attempts ultimately have failed. And yeah, we're creating a group for longs in rehab. Exactly. Pablo is like, fuck this market, man. Yeah, no, and Trenton, you're 100%. This is Bao's dream market. I mean, this is a market suited for Bao. It's funny, Bao and I are like completely opposite traders. Like, I mean, Bao is a short seller. I'm a longer. He's a range hold trader. I'm a range break trader. We're literally polar opposites. Like, literally, like I almost feel bad. Like when I have a solid win, it's normally one of Bao's losses. Like it's funny. Like I lose on the one Bao makes money on, but I lose small. And like on Bao's losses, I normally bank on. It's really funny. Yeah. And of course, Luke being the hero, the long, right? The evil Darth Vader, the shorts, right? That's how that works out. I'm the good guy, obviously. But yeah, definitely a tough times for long. So I mean, if you're, and even like short sellers, if you're just kind of getting your confidence and starting to try, and it's not as easy as it was like a few weeks ago, you're having a hard time too, because like if you're late, you're still gonna, you're gonna be doing more poorly than your expectations are, and that's gonna make you feel like lousy. But again, like I was saying, dude, like as a short seller, it's kind of hard to have a bad week when you have stuff like this. Like even if you chased it, like God, what's a bad average? What would be a bad average on that stuff? 995. You short 995. Oh, you short 990. What happens? Like, yeah, it's not the best average. Like you get like 20 cents in the green. That's not much. You have to wait. There's an annoying grind, but you're never in any pain. There's no pain here. And we're seeing this across the board. So CRTD. Yeah, I was long CRTD. Yeah, I was long to fucking look at it. It's so ugly. I was long CRTD. What was that? I had this one. I was ready for this one. I was really hoping for this one, but again, this one. And again, I'll talk about this. But yeah, this is a very anti-knee market. This is one where like I would normally just have a solid push up to 5 and be out. I had orders up here at 5. Like I had a solid average here. I had a solid like 38 average, I think, here on this. Like I put on like half of my shares on here, and I added. I remember I really wanted to add here, and I put a little FOMO ad on here, but then I got my dip and I got my ad on here. I had like a 38 average after my ads full size, and I mean I had an order here in the 70s and 80s for half, and it just didn't happen. I fucking stopped out here when it tanked, and that was it. So that was annoying. Yeah, but that, I mean, that basically sums up my trading. Just let me put on some hero, and it goes up, and then it just stuffs on me. Yeah, so I have not had a couple of great weeks. Yeah, GR, I actually longed that one today too. Actually, I gave it a chance. I gave it a chance. I was really patient with my entry, and I was like, I'm gonna give it one shot here, and if it stuffs, I'm out. You know, I sat through all this crap. I sat through all this crap, and I thought it could go, and it didn't. And I said 910 is my risk. If it breaks under 910, I'm out. Put put a little feeler on, added more. This is one where I just keep going because like I figure like the one that's going to be the surpriser is going to be the one that really just like comes off something either so bearish or so dead. So I gave this one a chance. It stuffed. I got out, and that was it. But yeah, this kind of stuff, GRTX at the open of the day like this is a good one to talk about. This one here, GRTX at the open of the day. We were all like Harry, James, and I were all saying on this one, like, fuck this one. Like this one's definitely gonna stuff 10. This one's so gonna like I remember like this wall here at 980, and it's just like the theme this week. I didn't add this in my webinar, so it's good that I talk about this. But the theme this week has been there have been massive just Warren Buffett selling share walls at these resistant levels, like literally like just billionaire sized walls, and and they just push and push and push. They don't break, and eventually they lift up just enough to absorb like 1 million, 2 million shares of volume, and then they stuff like a mother. And we've seen this. I can't even name all the other stocks. It happened like 4 or 5 times this week. And this was just another example. Like we were all ready for it. There was no buying anything up here. And it's almost like, why didn't I short it? And I'm just not in, I don't do that really anymore, short the first candle, unless there's something I love. And 10, I mean, I guess it's a nice level. I'm just, like I said, I'm not in the mood to short as of late. I should be, but I'm not. And yeah, I'm in a beautiful short here, but yeah, I mean, this is just, I mean, very expected, very absolutely. If you're a long, you can't even dream, oh, it breaks 980 and 10, I'm gonna buy it. You know, we talk about this a lot. Like when you're dealing with the first minute, I mean, even the first 10 minutes, like just take a breather, take a ALDX. I was fucking stoked for. That was the one that gave me the most heartache. ALDX was one. ALDX was this one I was hopeful for, but again, this was one, and the reason why I was hopeful is because I loved this daily. Like this daily, like for a breakout, looks fucking solid. I mean, it just looked great, and so that's why I had my hopes up for this one, just because I'm like, if anyone could do it, like maybe this one could, because it had such a nice daily. And it really tried, and it just couldn't do it. I remember on this one, I forget what my average was here. Where was I here? I got this one, I think it was after this pull. Yeah, I think I got in long after this pull. Yeah. So yeah, this pull happened, and I actually did. I went to short this one, and I ended up stopping out here in the 90s. I slowly scaled, and I only got a half size short, which is my biggest short I've had in months, but still. I shorted up here just because it was a little sketch. Everyone hated how this kind of reclaimed, and as a short, I did too. So like I cut my long, and then I put orders out to buy here. I put some out in the 60s and the 50s, and I got the 60s order. I didn't get my 51. I rammed my 51 back up here at 1380 because I was like, this is the bottom. We just ripped through VWAP like this and came back. This is the bottom if there's ever going to be one. I rammed that 50 and doubled. I rammed that 50 order up into the 70s or 80s. I doubled it up here at 1420, and I tried to be patient with it. I tried, and when this stuff like this, I think I bailed it right here. I think I bailed it for, I think I had like a 1390 average at that point, or a 14 average at that point, something like that. And I cut it off here for break even because I was just like, fuck off. I'm not going to lose money on this. It's not going to break the range. Oh, there it is. Yeah, I fucking rammed this 50 order up here. I added it 14.20 and I was ready to go. I was like, I want this 15 move. And that was for half of my sales too. I was getting ready. Like I was thinking, I'm going to sell half here on the breakout. If the breakout fails, I wanted to, but then I'm thinking maybe we could see 16, 17. We haven't had a runner in a while. So I'm going to give it that time. And like, I ended up stopping out right there. And then it ripped up. I didn't chase it back because I knew it was going to just stuff. And I just held the range, and I expected to hold the range. It actually eventually did way later creep its way back. But I mean, this is so annoying price action in the middle of the day to sit through crap like this. You got to have like a big time frame idea. And I guess I kind of did. I had a big time frame idea on this, but it just wasn't willing. Like the sentiment's not good enough for me to just, I don't know, have a position on and like not look. I don't have that much confidence in it. So anyway, I was disappointed with that, but what an ugly chart. Like what an ugly chart this was to break. I mean, for a 1450 break, yeah, this is Bao's dream chart. I mean, literally, you just know Bao, short here, cover here, short here, cover there, short there, cover. I mean, this is Bao's dream chart. Anyway, holy shit. It's already 7:20. Just rambling on about stocks. So let's go. Anyway, oh yeah, I forgot I traded ALDX in the morning. Yeah, I tried to go for it early, but I just, you can see that I wasn't very stoked on my prices. I wasn't very stoked on the action. I was very quick to cut. Anyway, that's one thing I should probably talk about. Like you'll see me sometimes take cuts like this, and then other times like on ALDX, like I didn't cut this one, even though I didn't cut this one until it like really kind of just failed this push here. Like where I'll be patient with this one, but not patient with that one. The golden rule, or the golden rule of thumb for me, is if I don't like my average, I'm quick. If I don't like my price, I fucking get the fuck out. Like you can really see that right here. Like I bought this, I kind of chased this up here at 1350, and I was like, fuck, I don't like 1350. I didn't want 1350. I want 1320s. I think I even got 60. Yeah, I fit 1350 or 60. I didn't want 1350 or 60. I wanted 20s or 30s. And like I'm really that kind of picky. If I don't like it, I'll sell it right away, and I put orders right back, like selling it and then put orders right back at a better price, because I know that I'm not going to be able to hold unless I have a good price. Like, see this one, like I buy it here, sell it, but then rebuy it. Like, I'm not really willing to hold if I know my price is shit. So that's like that what take from that what you want. Like you can adapt that yourself, or maybe it's a little too, but that's what, like that's kind of like a risk management thing that I have. If I don't like my average, I'm very quick to bail. Anyway. Okay, so yeah, so today's webinar, this is kind of a beginner one, but just in this slow kind of market when the market's kind of resetting, I kind of want to kind of go over this. I think it's a good time to go over this one. But there are a couple, like the most common questions that you get as a mod is, like, and it's a good question. One of the most popular good questions that you get is, if you could go back in time and give yourself advice at the very beginning, what would you pick? Like what advice would you give yourself? And I'm sorry, I don't even have a good mic. I just realized this. I'm going to change this mic. Sound cleaner. It should. Anyway, like if you could go back in time and give yourself advice as a new trader, what would you wish? And so I want to go over 3 things in this webinar of things that I really wish, concepts that I could have grasped, or advices that I could have heeded when I first started. Is it way better? I never really noticed when I'm on the phone with people, but It supposedly has to sound better. Will you split your winnings with me? Yeah, if you split my if I can split my losses with you, sure. Sounds like a plan. Alrighty. So yeah. So I mean, if this is your first webinar, welcome. It shouldn't be, as it's the end of the month. Probably a lot of ones at the beginning of the month. But anyway, we'll be going over the market sentiment, like I always like to do. Then we'll do a little bit of kind of what we just did, but more in depth on like risks and entries and exit levels on stocks. We'll go over the stocks of the weeks, see what moved, where where could have been some good entries, some good good risk levels to play off of, some good exits maybe in this market or in general. Then we'll go over the 3 simple lessons, and we'll have Q&A all throughout the webinar. So by the way, I mean, my webinars are normally lecture format. You guys can have fun. I don't really care if you guys blow up chat or not. This isn't like one of Joe's webinars. I hope he's here. I hope he's here. Anyway, so last week, let's get the SPY up here. Last week, we were seeing that hesitation on the SPY and the Qs, and the Qs are really still showing relative weakness to the market. By the way, we'll go over that. But it kind of seems like that hesitation was that late reaction, right? Because we got like the market was kind of just teetering up there at all-time highs, and it seemed like everyone was kind of waiting for some kind of pullback, and then we got that kind of tax headline like the day I did the webinar last week. We saw that red pull, and so what I was really expecting to see after that was a little bit of a pullback, and it's like I feel like the market really fucking needs it. Like the market needs to pull back. Like you all know. Just imagine it's not the index. It's the price chart. It's a price chart on something that you're going to trade. When the stock is just at the high, the buyer's hesitation is really waned significantly because nobody wants to buy the top, and so that kind of feels like the way the market is. And the SPY and Q still have a little disconnect here, and I want to talk about that. It feels like this week that the SPY, that the Qs, the weaker of the two, of course. The SPY, of course, is more diversified than the Qs, so naturally it has the least downside risk. But you can tell that the SPY is more of a bull. It kind of just charges. But the Qs here, the Qs are really like, this chart just says, I want to go down. To me, this chart says, I want to go down. I want to let me see 330, let me see 325, let me see 320 and have a strong green day back up to 330, something like that. Like this chart, like this was the tax headline day, this red candle. And if you just go back here, wrong one. Just go back here, and this just says, I want to just test lower. But the SPY here, and it's really evidenced by today. Like we had this awful day on the Qs today, just awful morning, and then we see this kind of like pull back, and this happened because the SPY kind of recovered, and it feels like the SPY here is like pulling the Qs up. It's pulling everything up with it, and the best analogy that I can use is it feels like the Qs and the rest of the market wants to take a nap, but the SPY keeps feeding it caffeine. Like the market wants to drop. The market is tired. The market needs a nap, but the it's being injected with caffeine right now. And you all know how you feel like when you're super tired and you have caffeine. That's kind of what the market feels like. It's just, eventually that crash is going to come. That it feels like that inevitable rest is coming, but we're on reserve power right now, and it's just not clean. There's no move that's clean, and there's no. And I was looking at this today.
The way I feel about the market is more like when I look at the ARC, it's almost like a little interesting indicator. When I look at ARC here, this is how I feel the market truly is. This is how I really feel that the market's at. The market to me feels a lot more like the ARC chart than the SPY chart. You know, this is where like the SPY. I'll do it side by side here. The SPY is up here, you know, minding its own fucking business up here, while the sentiment it feels like this. Like we never really recovered from the drop. This is really more, I get like more of what I feel the market's like. You know, when ARK can recover, it'll be interesting to see if the market sentiment feels better and buyers' confidence is back when ARK's doing well. I mean, that'll pretty much seal in the deal. That this will probably be my go-to. This will probably be my go-to indicator for sentiment going forward. But right now, this is more of like if I had to draw a picture of how I felt the market this is more how I feel it is. And this chart, you can definitely see this chart feels like it needs to come down, and the Qs kind of mirror that, right? The Qs look like, I mean, the Q's been being brought up here, this caffeinated run by the SPY here, but it feels like the Qs, the NASDAQ needs to pull. I think I don't think ARK is the lead. I don't think ARK is has to do anything. I don't think it needs to do like a pullback to 111. I'm not going to speculate on what ARK's going to do, but I mean, just on a raw chart level, this matches what I feel the sentiment should be. More reflective than the SPY. And we're seeing that in small caps too. It's not there. Like the theme I gave for last week's small cap market was fizzled sparks, which is basically what we saw last week. This week we actually saw a little bit more, but just completely got shut down. And so just overall, like small cap, large cap, mid cap, like I feel like there's just more downside risk than there is upside reward. Like I don't know if this is across the board, but for me, I mean, this tax fear, inflation looming, that like we see these like random 1% drops, like 1 to 2% drops on the Qs, and it's just like, well, why do we have to suffer these death drops, right? And if you kind of like, that's kind of the way, that's kind of like the action that you see, you know, when you see these blood in the water cracks in before like a major pullback, or you see it in small cap stocks, mid cap stocks, these blood in the water cracks before like an unwind. Even you see it on the SPY and on the Q's kind of daily charts, right? Like you see these blood in the water just like pulls that, like this one on the 4th, this one on the 27th, this one, you know, this one here on the 10th. I talked about this a few weeks leading up into it to this kind of pullback. And that's kind of the kind of shit we see is he's like, oh my God, what the fuck was that? And it just like, it stops all longs out of their position because longs just don't have the confidence. They're like, fuck, if we're going lower, we're selling. If we're going lower, we're selling. If we're going lower, we're fucking selling. Like longs are a lot quicker to sell and a lot more hesitant to hold through these dips because of the nervousness that's up here. And unfortunately, that's where we're still at. Harry Dent said next 60 to 90 days, the market is going to get hit due to inflation. We'll see. I'm honest. I'm not a fucking expert on how long it takes for inflation to hit the market. But we'll see. I'll take his word for it. It'd be interesting to see. The point is the market needs a reset, and like it would fit in, right? Like the market feels like it needs a reset. If that's about the proper timing, you know, that's about how long a reset should take, you know, so it seems to fit. That's what I'm kind of rolling with too. Anyway, so one kind of analogy I gave last week regarding the small cap market was, as long as Amazon, Google, and Facebook keep killing it, and that's honestly what I was talking about a couple of like 2, 3, 4 webinars ago, where the thing is like these big winners are the only reason why the indexes are up. It's like there are 3 or 4 or 5 winners, like more than that, obviously, and a whole lot of losers, as opposed to everything's just, going up together. There's like everyone's putting their money in the handful of full safest winners, and that's it. That's it. Like everything else is getting shafted. All the other stocks are getting sold to buy these few beta names. And yeah, Google. Yeah, it's just Microsoft's one of them. Yeah, it's all these what word am I looking for? Front runners, I guess. The front runners of the markets are getting all the attention because they're like safe havens. They're the only ones that are doing well right now. So that's kind of, I feel like that's still in the, it's funny, I've been watching a lot of chess videos. That's still in the position. Chess, when people go over chess videos, they'll say this, they'll go over a variation and they'll say that's what was in the position. And if I want to say it a lot about stocks too, that's what's in the position here, right? That's what's in the sentiment. That's what's on the chart. Like it feels like that's what's here. That's what's in the climate. And so in small cap land, I gave this analogy where I thought that we could go another trip around the board or another trip around the sun, around the Monopoly board, but skip, without pass and go. And what I meant by that is we'll go through the buy, sell, dead without hitting the strong fund buyer's market. And I think that kind of explains this week exactly. Like this is the week where we got more activity. We got more, we got a little bit more spark, but all those sparks, whereas they were stronger than last week, all of them got torched. All of them, none of them ever released. None of those ranges ever really broke. And of course, I'm excluding stocks like BTX because BTX has like a 30 share float, and it's not really a trader. It's obviously getting traded and stuff, but I don't know. This is one of those where these are so thin that they can't be responsible for really any sentiment unless it did something insane like 300 or 500. Unless it does something insane, this is well within the purview of a stock with as thin a float as it has. When these stocks have incredibly thin floats like this, it's not obvious that they're going to go up, but when they do go up, it's nobody's excited about it because it's like, well, yeah, it's got like 10 shares in the float. Like, what else do you expect? Its range is huge. It's not like this is an unexpected or extraordinary move for a stock with this float. So it doesn't have that wow factor. It doesn't have that surprise factor. So, we've yet to find that one stock that really just fucked over shorts, that really got longs excited, because longs aren't excited when they see this. They see this and they're like, well, yeah, but I'm not going to buy a shit show guest stock like that anyway, so it doesn't give me hope for something else. That's the whole point. Like, in order for that sentiment to change, hope needs to be there, excitement needs to be there. Shorts need to be like, holy shit, what the fuck, right? That needs to be in the position, and it's not. And so I thought that the runner was near, but like I said, I wouldn't be surprised to see it take a little bit extra time, longer for it to happen, because it kind of felt like, in my opinion, last week we had a little bit too much activity. We had a little bit too much activity for there to be a surprise runner. The surprise runner almost always comes when the market's just fucking dead. And this has just been the experience that we've seen in the years past, right? Like, that's why I have this chart where it's buy, sell, dead. And the problem is that last week it was almost like there were too many tries. You can't have so many tries and then expect one of the tries to be a runner. No, when there's constant tries, it leaves a precedent, right? Like when you see 3 failed stocks and then a 4th one pops up, there's 3 precedents for what this one should do, right? That the precedent needs to be nothing's going to happen. That really needs to be the precedent for a runner to emerge out of nowhere and really shock everybody. Because if you have like 3, 4, 5, 6 almost and then fail, it's really hard for a runner to emerge in that kind of climate. And that's why I thought that we could just skip it. And I think we kind of did skip it. And what else did I say? Yeah, and so basically no one has to have the eyes on it, or it's going to be a stock, on a reclaim on a stock after a morning run and fail, something where people think it's over, but it really surprises people. That's where the hope comes from. That's where the squeeze comes from, is that, holy shit, I didn't expect that at all. Anyway, yeah, I mean, so the one surprisingly bullish thing I will say about this market is we have seen a couple of interesting multi-day runners, even though their intradays are kind of shit. They're, like what I mean by intradays are kind of shit is they're not really going up in a longs friendly fashion, where like they're really grinding up in the middle of the day. And I don't know a lot of traders that really do that kind of trading where they buy something midday in an algo grind. But that's how they've been going up. It's a very difficult way to capture the market as a long, but nonetheless, it's a bullish set factor, right? And some of these are like VXRT, MVIS, OCGN, BTX. These are all stocks that held their multi-day runs, and that's something that we haven't seen in a long time. It means that there's a sign of continuation. It at the very least puts overnight shorts it gives that one sign of fear for shorts, where it's like, well, maybe I can't hold it overnight. I'm still solid intraday, but maybe I shouldn't hold something overnight unless it completely gets wrecked. And that's a first step of change, right? That's a first step of change is when shorts feel like they can't hold as long, they start to cut their bottom out try to cut the bottom of their range out. Everyone follows, and it kind of sheeps like that. Yeah, and eat up of an offering is a good sign. So there's like a shine of bull. I always want to say bullshit of bullish. There's a ray of bullishness in the darkness, but pretty much everything, it is still a very harsh bearish market in small cap land. The stuffage levels have massively increased. Fader strength has increased too. The stocks, when they do fade, we're seeing, when they fade hard off the open, if they fade hard, they ain't coming back. Well, a lot of people are now because it's working great. And yeah, I mean, the theme of this week's is like literally what's a runner. We haven't seen one in a while. I think we're definitely back in the sellers dominated market, and this probably has to continue for another week or so. Like the sellers market, until like shorts have to be in control. Longs have to get disinterested again, and shorts have to get bored and start shorting anything that fucking pops. And when the market gets dead again and shorts just keep shorting anything, if it pops up 15%, they short it. That's when the runner comes, when shorts are willing to short stocks up 15%, because why not? I mean, they just win all the time, right? That's when that market changes. And so that's where I think we're at. The shorts effectively trampled on the longs turn, basically. It's been stuff city, literally death everywhere. Pre-market action has been really quiet. That's why, dude, I'm still gonna wake up at 3 or 9. I'm still gonna wake up at 9 until if I was living somewhere else, I probably wouldn't, but I mean, I'm getting to sleep. Like, I'm not gonna wake up at 1 a.m. to just fucking sit there, to sit there and not trade and just potentially lose money. Like, I'm not gonna put myself in the position to just lose more money. Yeah. So pre-market action has been really quiet. So pretty, nothing to really wake up for as a long. First resistance shorts are working beautifully. Like, literally, like when that morning sets a range, you get a short on that. If that range is established pre-market, you get a pop up there at the open. that's a short. That's a beautiful short that's been working great. This is the mistake I wanted to say. This was my mistake. CVXRT. This is what I meant to say. Yeah, and so established levels. Once there is an established level in the morning to like as a top, there are just jam-packed sell orders there from longs who know that it's not going to break the high, and from shorts who know that it's not going to break the high. Both of these guys know that it's not going to break the high, and that's why everybody puts their orders there, right? And so just like the VXRT stuff, which by the way, in another market, I would have longed the shit out of that move. Oh shit, it's not tied here. In another market, I would have longed the shit out of this move. We're strong with that. We push, dude. We're gonna break a new high. Like I would have had an order. I would have bought this. I would have added here. Not now. I would have bought the shit out of this kind of stuff 3 months ago, 2 months ago. And so anyway, yeah, this kind of stuff when it just pushes up here at 11, like this was just, there was an established range here. Like you knew this was a top. It was a top here, it pushes up. This is still a top at 11. Like it was just jam packed with orders here. You just knew. Like it was really struggling in the 1090s, like 1080s and 1090s. It was filling fucking shares. Like it was a battle in the 80s, a battle in the 90s. It touched 11, slammed back down to 90s. That was mega stuffage action there. And that kind of shit doesn't happen. If it was going to run, dude, that would have squeezed the shit out of everybody. It would have been up. It would have been at 1110 after seeing 1190, right? If it was thinner and shorts were afraid and shorts were covering instead of entering, right? That's the thing is when this stock pushed up here today at 11, shorts were filling. Shorts were not covering. Shorts were filling, just absorbing all of that. And so, that's what I mean by just established levels are just jam-packed with sell orders. This is 100% the shorts market, shorts dominated market. And the patterns the four patterns that I really noticed is that this week has that the few winners are concentrating their demand. That's why a few days ago, I think NVIS was my favorite one. My favorite stock. Now I didn't capture it because I was stupidly watching SJ. I remember that. Like I knew like NVIS was my favorite just because like I noticed that the few strong stocks were winning and holding. So any of the multi-day runners were probably going to have the biggest chance of having a move. The few stocks holding their gains are the most bullish. The morning range on stocks, once that morning range is established, it does not break. And I think that needs to be the expectation until going forward, until proven otherwise going forward. It does not break in the morning. So it can break in the afternoon. It can break midday. But in the morning, once you find that top, expect that to be the top. Scared shorts were covering there, but the amount of scared shorts versus shorts saying thanks for the 1090 fill is minimal. The other pattern I see is stocks under VWAP midday are not safe to stay under unless they're well under. Unless they're well under, they're not safe. Some of the bottom of the range has been cut off on these midday stocks that are still alive enough for an algo to say, yeah, I could probably make some money off of midday boredom traders. But when they're really dead, those are super faders. Algos aren't going to touch them. The only ones who are still in are the stubborn longs from the morning. And the last pattern I've noticed is that the classic long stocks, the hot chick in the morning, the low float stock with the catalyst, blah, 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 and that's up the most. That stock has been overcrowded as fuck. These are the SJs. These are the ALDXs. These are the CRTDs. What was the one today? GRTX. These are the GRTXs, right? These normally the main gapper. These main gappers, where it's a low float, blah blah blah. It has, textbook definition of the highest chance to become a runner. These are the ones that are just getting slaughtered, because these are the ones that are getting crowded as fuck on the long side. And so, this classic long is not doing that great. So, yeah, just be careful of that one. Don't go to the bad. If it pops up again, don't be like rebuying them, like that kind of crap. Like, basically, at this point, the runner is going to be the runner that breaks the pre-market high, right? That's like when it breaks the pre-market high with authority, that one is going to go fucking far beyond. But until we get that one, if it tanks, let it tank. Ugly witches, yeah. So that's, you just know some stocks are just ugly witches. Like, they just got ugly witches behind them. Like when they pop up and they stall, you just know that there's an ugly witch behind there. And one more thing I wanted to mention. This market, basically, if you want to think of market trends, and this is important for what I'm going to talk about. If you want to think about market trends as a whole, like, we have this buy, sell, dead. Now, there are multiple different time frames you can kind of do this on. Like, we had a legitimate awesome market from mid to late October all the way to mid-February. Fucking awesome market. Awesome, super, super bullish. So we have this super bullish market here. It kind of makes sense, if you think about it, to have a super crappy, I say crappy, that's biased, a super strong seller's market right after that, and then a super dead market kind of after that. In the grand scheme of things, there is a larger time frame, market trend. And, whereas we normally deal on the kind of week to week, kind of couple weeks to couple weeks on that, there's likely a month one. So like, we could be in a month, a month-long time frame seller's market and still have like a buyer's, seller, and dead market inside of this larger time frame seller's market, right? I talk about this in a webinar before, I don't remember which one, where I talk about all trading is one time frame working its way in another time frame, working its way in a larger time frame. That's all stocks are. It's a whole bunch of trends. There is a 1 minute trend inside a 5 minute trend, inside a 15-minute trend, inside of a 30-minute trend, right? Inside of the daily trend, right? Everything, all like asset pricing, all charting is trends within trends. And right now, this is basically, I think we're in, right, the trend is bearish, right? So the buyer's market in the bearish market is going to suck. It's not even going to be that great. And that's probably what we're seeing right now. This is a shit buyer's market because the trend is, right, the larger time frame click is a bearish market, right? We're in a bearish trend of a market. So the buyer's market in that market is going to not be as good as the buyer's market in a larger time frame buyer's market. And I think that's why we're seeing it. That's why I say, like, we're skipping the buyer's market. I'm saying that like we're skipping the fun buyer's market. The fun buyer's market might not even come. What we saw this week could be as good as it gets, right? I think it'll get better than that. But we saw some activity. We see some things holding. It's not the strongest holds, right? These, OCGN is one of them. Like, let's look at this chart. OCGN is one of these. Yeah, this is a bullish hold, but it's nothing special, right? There's nothing like wow, like fuck, like is it too late for me to add? Like, I'm not like stoked on it, or MVIS. Like these are, oh fuck, look at it today. But yeah, like it holds up here. It's nothing to be excited about, or like it's a nice hold, but it's nothing like this kind of crap, right? It's nothing like that, or like look at this move back here, like, and then boom, another huge move, like a secondary huge move. It's, or it's nothing to get excited about. And so that's likely what we're seeing, right? Is that we are in a larger time frame sellers market after the 4-month great bull market that we just had. And so the buyer's market here is not going to be as strong as the November or the January market. So anyway, those are the 4 patterns I see in this market right now. And what I think is coming up is that we see basically another couple weeks of this. I basically think that we see another couple of weeks of everything stuffing until we get dead again. I basically think that we do need to get dead again before we can get anything exciting. So I kind of talked about that already, but yeah, that's basically how I feel about this market. Anyway, so are there any other stocks that we want to go over? Any stocks that you guys traded where, thinking of like, where could I have gotten in on this one, or what, I couldn't decide what to risk, where should I have sold, blah, blah, blah. Any tickers that we want to go over and look for good entries, exits, targets, or risks? Pixie today. Hey, look at that. And see, look at this bullshit. See this pops up here. It's not breaking the morning range. Like, it's not going to do this. It's not going to, like, this is where this stock could have been a runner, right? Well, I don't know if it had any catalyst. I think this was like a chat pump. Today. But yeah, that's pretty nice. That's actually pretty nice. I didn't even see this one. Volume is a little to be desired. SPAC news. That's relatively hype. Yeah, that was a nice little move. Sucks that we tanked all the way back, but this comeback is the most bullish part of the entire. Oh, look at that! Fuck that! How's that? I didn't know that happened too. This comeback is the most bullish part of the chart. This isn't even the most bullish. This is like a little midday squeeze, but this comeback is the most bullish part of this chart for sure. So where could we have gotten in? First of all, I don't know. Nothing prior to this move. I don't think you buy up here. I don't think you buy this here when it's such low volume. It probably had chat pumps all over it, and it's very hero and guessy. I don't think you buy this here. I think you have a solid first bounce here. You have a solid first bounce into this kind of stuff, and you would have lost here as a long. I think this is an okay long to take if you bought this first bounce here. I think it's an okay loss to take. As a short seller, you could get short here into view up. You probably cut this. You probably would have cut that there unless you accounted for big range, which I don't understand why you might have. The volume wasn't that low, but I can't see how it would have. This is dead long after this, by the way. We're dead on the long side after this. That's why I immediately flipped to short. You probably would have covered this, but this is the one where you can kind of cover it and just, like if it comes back under view up, you can put it back on small. Hope to get an add up here into 320s. Obviously, stop out at 335 kind of stuff. And, like you probably don't have full sizes of pops. It gets under 3. This is where you can hope to get an add up here into 3 and 310. You might just get the 3 and still not be full size for this. God, as a short, it's kind of hard. I'd probably cut that there at 3. Then we kind of get into longs, like, I don't know. If this had happened back here, I would say long it. This is kind of end of the day stuff. I probably wouldn't long this. It's kind of end of the day, an hour to go. Maybe. It depends what kind of idea you had on it. If it's SPAC news and it recovered, you can consider a buy here maybe for, maybe an after hours run. I probably would have sold it here though. If we get this push in this kind of market, right near the close, I miss out on this. I'd probably in this market I'd probably be okay with missing out on higher. But this is one to look out for tomorrow. Yeah, this is kind of day zero though. You know, this kind of just pops up here out of nowhere with news like this. So yeah, I mean, this is kind of hard. I'd say you could get a short in here. It depends what kind of range you gave it. There's a chance that you don't stop out at 330 and you add here instead. Depends how much range you want to give it here. I probably would have stopped out, but then I would have got right back in. So that's more my style. I'd rather get out and get back in than try to account for a big kind of range, because a lot of these times they just pop under here, stuff VWAP, stuff 325 or something like that, and then just fade. And I want to have some kind of size on for it. So the way I probably would have traded it short, I short here, I get an add at 320. I probably stop out 330 and put it right back on. 330 daily line, no, there's nothing. The only daily line here is like 390. And that would have been why I would have dip bought this, right? I would have dip bought this here so that I could sell some here, you know, in the 80s. And when we break over high a day, I would have had orders there. CLOV. CLOV today. Yeah, so daily, I was watching this one for a long today. I didn't, but I was watching it for one. So what I really liked was this 1050. And my idea is that if we could, excuse me, if we could if we could like open higher like this, if we could open higher and we can have like a washout to 1050, I thought this would have been a solid long here. And so I didn't, because I just wasn't looking at it. Wow, it did get close though. But I guess, I mean, it just looked like such death. And at this, I probably had taken it off the screen, because like when we opened up here and push, I didn't like the push. That's why I didn't like it. I didn't like the push out of the gate. What I wanted was a washout out of the gate. That's why I took it off. So, I mean, it pushed up and then death, and I didn't like it after that. As a long, you don't chase this kind of gap up like this when in this kind of market. You just don't buy this kind of crap. You need to see this hold. You can attempt the first bounce here. You're gonna lose. Or not. You're gonna stop out rather than lose. Oh yeah, WVVI. We'll go over that. This is a solid entry for long. If it failed, this is definitely a good place to short. Vic hasn't been in the chat room for a very long time, but this is Vic's favorite setup for a short. And it's a very classic setup. It is basically the exact opposite of like a first bounce kind of trade. When there's a stock that like, he does two things. What he really likes is when wherever the first bounce level is and it fails, what he really likes is to short a pop up to that level, especially if it's immediately, that first pop into like the failed, where it failed to break, right? Where this previous support becomes resistance. Any pop into 1140 is a great short, like especially immediately. I mean, you can short it here too. Like I'm the kind of range break trader where I will short it here. I like shorting this kind of crap. Like I'll slam it here, risking 1150, or like downsize at 1150 and then like put it back on if we get lower. I'm that kind of trader. I'll short it something like this. Vic though has a very nice setup which beginners can take. You know, the second this happens, you get a first short into 1140. It didn't happen, but that's why I always take some on the break. I'm a breakdown shorter. So I like to take trades here, risking 1150, 1160, because if it gets back to 1160 after breaking this, you don't fucking want it anyway. So I'm okay with risking even before this level of 1170. Like I don't need to risk 1170. I'm happy risking 1155 even, and I'll stop out. And if it stuffs me, I'll get back in, like when we break under again. And now I have a set risk. And so I'll take that kind of trades. But yeah, solid short risking here off of this fail. This is, you could still short this here. I think this is still an okay short. Straight into here, view up. You have this level to play off of. This is a nice short. If you're short and didn't cover here, I mean, I'm sorry, this is a cover. This is where you have to take your trade off, no matter what. Even in a shit market, you just fucking have to. As a long, again, you're looking at this 1050 level. This is really tough to buy after it pushed and failed. You know, if you really like the name, if you have some kind of underlying reason why Clove should be a runner, you can take the trade. If it's just a solid, I guess prior close helps too here. Prior close makes us, you know, if it's prior close, that's another jelly bean. You know, like, you know, this is one where I could take the 1050 trade or not. I would have missed it anyway. But if we got down here, I might have had to take it if I was looking. But, you know, this is kind of one of those where 1050 and prior close, if it was on SSR, that would make it even better, but you can't have SSR and prior close. Well, you can if it's day 2 of SSR, I guess. But anyway, after that, yeah, you cut it, it comes back under. This is a hard one to reshort. I probably wouldn't have reshorted here. I would have waited for here as a short. It's dead as a long after this reclaim fails, by the way. That's an assumption that I should have said. Once this reclaim fails, it's dead as a long. And I probably wouldn't have reshorted here, though, because, you know, it's chances hold. I don't want to be guessing that much. We get back under here. You could put an order here if you really like the short. I probably would have waited for something like this to make sure that it's dead under VWAP before I put a short order here. And that's great. Probably have some covers. I probably wouldn't have added to this short down here. This is probably not an add to a short with this daily. This is a nice grinding daily. I don't really want to be adding to some kind of lows like that. I probably would have been having some covers here. Definitely saving some for red. And, if you're that kind of trader, I probably would have covered everything on this flush. Now, if you're an all-day fader, you can, of course, be patient and wait. I would have covered everything on the flush here. If I had a VWAP short here, this is, if I had a VWAP short, my target on this VWAP short is going to be this prior close, right? That would be the target. The reason why I'm getting in here is for this move right here. Whether, whether I want to hold some for a fade, maybe or not, but this is where I'm, like, myself personally, I'm covering most, if not all, is right there. And yeah, we'll go over WWVI. I almost tried this one. What the fuck? I've been saying that all day. WVVI. Yeah, I didn't have the stones to do this one. I just didn't like it enough. I thought this one could be the quiet surprise, or like a low float BTX kind of stuff. Like, it's super low float, everything's dying. Maybe this one could be just maybe I could just put a small amount of shares and hold for $30 or something like that. I kind of had that like maybe-ish idea, and then like I think someone said chats were in it, and I was like, oh fuck this one. I just didn't have the guts. I tried, but yeah, I think this was an okay long. I think actually a couple people stopped out of this. I think a couple people stopped out of this short here. I remember looking at it; it looked pretty good. But honestly, I stopped out not because it stuffed, because I got a shit average. I was gonna stop out anyway. I really wanted like 1570s or something like that, and I got a fat finger and got 1595. And I cut it like the second I sold it. The second I bought it, I sold it because I had a shit average. And you could see that's why I rebought it, because I'm like, I wanted like a lower price. And then we held, and it was giving me an opportunity for a lower price. And I was like, well, fuck, I'll take it. And I took a small bit, and it fucking stuffed. I was like, fuck that one. So I just didn't have the stones on this one. It was just too speculative for me. And I took it off. And again, like here, it's dead as a long until it reclaims. So like this is an okay short to do. I think this is an okay short. It's pretty thin, so I wouldn't be shorting this anyway regardless. But if I were to short it, this is where you short it on this first VWAP touch. You probably missed this fill here. And I wouldn't even like it here. I wouldn't even like this short here because it's too close. I would have liked to have seen this much distance between VWAP before I put my order out. It's dead as a long. I'm not really looking to play the hero and accumulate this. It did kind of make its way. I think I talked about this here or maybe later. I don't know. Oh, maybe it was here. Yeah, it was here. I talked about this later here. This right here was a key moment. Everyone was looking at this. I think I said in chat, this is just not worth. Once it failed this is just not worth the risk to reward. Like the risk to reward of buying this before it breaks out. Like if it breaks out, that's another question. You can take it, assess it from there after it breaks out and holds. But this is where you don't like. This is the top of the range until proven otherwise. You don't want to be buying this kind of crap before it breaks, unless there's like good reason. Unless there's like a good reason to like, you know, like what's the news? Like, is it something super hype? There was nothing super hype about this one, so it's not something I would even toy around with buying at the high before it breaks out. Like, it's just not worth the anticipation risk. What about the higher lows under VWAP? Yeah, again, this is very hero-ish. This is where I will take this kind of trade if there's another reason to take this. If there's another reason to take the trade, I will be the fucking hero on it, right? If I have an underlying fundamental reason, like, dude, like it's phase 3, or like it's got it could potentially be a new sector, or this could be the runner-up to something else that just ran, right? It could be a sympathy. If there's some other reason why I want to buy it, I will be buying this kind of stuff, because this is like, I do like higher lows, easy risk above VWAP, but for me, the probability factor isn't there to make it profitable unless I have, you know, some kind of underlying reason. And I did a whole webinar on this called Your Greatest Ally, right? I would need an ally for my trade on this. Yeah, it is a nice trend line, but I won't just buy something like this because, I mean, you could draw trend lines however you want, right? I can be like, dude, that's an uptrend. Or I could be like, dude, I can be like, dude, that's a downtrend. It's really like, I mean, there's a lot of ways to see that. And so that's why it's like, you know, the day I had nothing to go off on the daily. There's nothing here. So I had nothing else. And I'm not going to take this trade down here just because it's a nice trend here, because there's a conflicting trend. So I don't have that, right? It's not enough for me. And again, I didn't think it was worth the trade to buy before it broke. Yeah, and of course the fills are horrible because it's a thin as shit stock. Yeah, and I experienced that here. I was trying to take a little ask here, and I tried to take the ask and got filled 20 cents higher, and I immediately sold that. So anyway, yeah, so that's good for that one. And yeah, let's get back. Those are some good ones. Oh, thanks, buds. Yeah, that was a good question. Anyway, so let's get started to the 3 lessons here. And I almost preface this webinar with by saying this one will probably be a short one. And I knew not to say that because it's already 8:11. I haven't even started the content part of the slides. I knew better than to say that, because I always say that and then it always ends up being 2 hours. Anyway, so the first simple lesson, like one of the first things I wish I could have been taught, I need to clean my glasses. One of the first things I wish I could have been taught as a new trader is to just go with the trend. And I mean this in a lot of senses of the word. And that's why it's called a simple lesson for a reason. You know, the most important thing that you can learn as a trader is to not try to be a hero, right? Because heroes, even experienced heroes, right? There's a very funny quote, right? The graveyard is full of heroes, right? Whenever you're about to do something stupid, you know, the graveyard is full of heroes. So that's one of the things you need to avoid as a new trader, or you're going to go bankrupt, or you're going to you're going to blow up your account or bleed it to death. And so it's the single most important lesson that you can learn, because Superman dies as well, because the stock market and human behavior in general in the market is very late. And I'm talking about human behavior in everything, in politics, in solving world problems. I guess it's politics, whatever. Like, everybody is always late to the, like Pokemon cards, even like the Pokemon card hype. Everyone is now into Pokemon cards after Charizard is worth $150,000, right? Everybody is always too late. Everyone's always a sheep, and that's why sector plays get so much hype and they all die, right? Because everybody is a sheep. Bitcoin is a great example. Everybody is always a sheep. Everybody is always late on all kinds of trends. You see it in politics. You see it in asset prices. You see it in real estate. Everybody is always a sheep. Everybody is always late. There is, human behavior always leads to brash overreactions to events, which eventually leads to corrections. Now, here's the thing that a lot of traders just immediately go for. They immediately go for correction. What can I identify? I can identify brash overreaction. And that, light bulb goes off in your brain and you say, that means correction, because everybody knows that after extension comes correction. Everybody knows that. So people figure out one part of the puzzle and they think that they have the other part of the puzzle. And so because they know that another part of the puzzle is coming, they say, I can now predict what's going to happen. And this is literally what fuels short squeezes, right? This is how they happen. And so the market wouldn't need corrections if humans or traders weren't so slow. Basically, the market wouldn't need a correction if humans and traders were efficient traders, but they're not. One thing that you have to remember is that people are always late. People are always slow. And so, and this goes, and I'm not talking about just a price chart. I'm not talking about just a stock that's just climbing. I'm talking about like market sentiment, right? Like the market gets bullish and then it gets really bullish. Why does it goes from bullish to really bullish to bearish to really bearish? That's how the markets goes, right? Like it goes bullish, really bullish, bearish, really bearish, because people try to follow what just happened, and then it goes dead to really dead. And there's always like multiple steps along the way. There's this continuation effect because people are late, people are slow. This is what causes the inefficiency, because everybody needs to get in before the correction happens. That's basically how it works. So an analogy I like to use is, imagine that you were imagine a stock's just going up. Now, there's take this with a grain of salt. Imagine there's a stock, not even a stock, any upward trajectory of anything, like anything, like water boiling up, or a temperature gauge going up on a thermometer. It really doesn't matter what we're talking about. Anything that's in movement. Throw a dart at a place in movement, anything. Throw a dart at a place, any place along the movement. Throw a dart. What are the chances that you get the top of that thing moving up? What are the chances that you get so fucking low? Why? Because if it's a thermometer, there's no human interaction, right? But God forbid there's human involvement. That thing is going to be so messy that the chances that there's 7 billion people on the planet, and how many of those are traders? The chances that you're going to throw a dart at the exact top is so fucking low, right? And so when you try to be a hero like that, and this goes back to why I always say, don't try to get the first runner in the dead market. Don't try to get the first runner of the bullish market, because you're basically trying to find the bottom. You're trying to throw the dart on the stock that's going to change everything, right? You're literally trying to throw a dart on the chart, put a buy arrow or put a short arrow on that chart. And the chances that you get the top are very small. Even with education, your chances, an educated guess, your chances are very small. Even if there's a line, we all know shit goes 10 cents over a line too, right? And so not just on a price chart, but in the market sentiment, in sectors, right? You try to guess when a sector's over, and then like GME happens, right? Like entertainment's going and then GME happens, or NFT stocks, and you try to find the end of a sector and you just get hit with another one. It's how do I say this? As far as types of moves go, like there could be a whole bunch of stuffs. Like right now we're seeing a whole bunch of stuff. Like stuffing is the pattern of the month, right? We're seeing a stuff move, a stuff move, a stuff move, right? Why would you be the long that says maybe this one won't stuff, right? Maybe this one won't stuff. And I almost wanted to make a joke today, or I wanted to make a meme, but I didn't know how to do it, where the meme was going to be, it feels like the market right now is being like a whole bunch of 4-year-olds were given candle shaped like this. Shit. We're given, we're given candle shaped, like this kind of candle. Let me see here if I can I change that? Format picture here. Shape options there. Transparency. All right. So we have a whole bunch of candles like this, right? And you give a 4-year-old a whole bunch of candle-sized blocks that look like this. Crap. I'm gonna have to edit this here. Whole bunch of candle-sized blocks here. I gotta fix that. Anyway, about this size. And they have to make a chart. Red and green ones about this size. But then all of a sudden, they're also given one candle that looks like that, except it's red. They get a candle that looks like this, except it's red. And so that's basically what this market is. And so if you were going to be a trader in this market, if you know that the stock is being drawn up by 4-year-olds with candles this size, red, green, doesn't fucking matter. But there's going to be some time where there's going to be a fat, I almost said something inappropriate, like just stick size, size red candle like that somewhere on the chart. Why would you even buy it, right? And that's kind of the only reason why you would do that is if you think it's all over, is if you think all of those big red candles are over. So the thing is, the trend right now is that everything is stuffing. Why try to be the hero, right? Why try to get that first one? Get it back there. Anyway, and so that's the first lesson is don't try to be that hero, because the chances of you being the hero are so small, and especially if you're not experienced, you got very little. You should be taking very little. I'm trying to get the top trades or bottom. Anyway, fighting anything in the trend is the quickest way to find yourself in the pit. And so this is where the real trouble comes. Like the real trouble doesn't come from losing on that venture, right? And I'm calling it in the pit, because that's just however you want to say it. This is when you're mentally fucked as a trader, when you just can't stomach anything else. Like you're just so depressed about your trading. Just everything you do is a loss, and you're literally just in a huge, a huge slump. You're just mentally in the gutter, because fighting a trend is, because when there's an emotional, egotistical thing that happens when you try to be the hero, when you try to get the bottom, when you try to get the top, you get the first runner, blah, blah, blah. There's this mental like leap that you're doing, this gymnastic performance that you're trying to do. And if you don't stick the landing, it really hurts. It hurts you more than if you just took a loss on a random, oh, it's a VWAP reclaim, I'm going to buy this. Oh, it didn't work. oh, it's a stuff. I shorted the pop and it broke and it covered. Blah blah blah. You take one of those like structured kind of trades where it's like, oh, if I lost, I lost. But when you try to be the hero and you fail, there's an ego hit that's extra on top of that, and that's the quickest. That's how you get into the pit, is when your ego takes a hit. You could take loss after loss and your ego can stay relatively, unchanged the more experienced you become. But when you try to when you're really invested mentally in something and you lose on that one hurts. And so when you spot a trend, right, and you're a trader who has been burned before, this is what typically starts to happen to new traders who have been burned before after they see their beginner's luck, blah, blah, blah. They start to get really overly cynical. It's okay to be a little bit more cynical than you were in the beginning, because in the beginning, you're too optimistic. In the beginning, you're too optimistic, and you need to have a little cynicism. Is that the word? You need to get a little bit more cynical. But here's the thing. Humans, we always overreact. We're very sheep. We're very late. We always go overboard. I mean, just in general, in our behavior, we do this, especially traders. What's the thing that Matthew McConaughey does? Most of all traders, right? Like most of all traders were like this. And so we're overly cynical. And so your first instinct will be to always distrust. There's a trend, you're like, this trend's not going to fucking hold. Guarantee, watch. And then you just sit there and you watch it go up and up and up, right? Or you see a stock tank on a death candle and you're just like, whatever, it's going to come back. It's going to fucking come back. It's going to fucking come back. And you just see it fade all day. It just makes up, it goes up to VWAP, it makes a lower high, and you're just like, this is not going to work. It's not going to work. It's not going to work. And what do you know? Fucking works, right? We're in a downtrend. We're broken. And what do you know? It works. And so your first instinct is going to always be to distrust. And that right there, that's an emotional response, right? That's too much. That's an emotional response to have being burned before. That's you not being able to just reset completely from a prior failure when you overcorrect like that. And basically, when you do that, when you overcorrect like that, you're not giving yourself any credit for anything you may have learned since then, any kind of growth that you might have had as a trader. You don't even give yourself that credit because you're just automatically distrusting anything. I have a webinar on how to do that. It's how to get out of a slump. You should check that out. It's called slump trading. I can't get into it now because I only have like 20 something minutes. Yeah, sorry. I just can't. That's a whole nother ball of worms. But anyway, you're not allowing yourself to move past it. And so, examples of this is when, just when you ever see a trend, your first thought goes to reversal. Why is the first thought reversal? Like, why isn't the first, I mean, you can be a reversal trader and you might develop into that, but the first thought needs to be, how long is it going to go? Not like, where's the reversal? They're similar questions, but I mean, they're rooted from a different place. They're very similar questions, but they come like one of that first instinct is, how do I nail the reversal? Instead of, I mean, what if it had $100 more to go? What if it's an uptrend and it has $100 more to go? Why would you even think about reversal then if it's at like $10, they can go to 100, right? The first thought should be, well, how much does this actually can go? And then where's the reversal, right? And so automatically looking for the reversal on a stock that's in a clear uptrend, or flip that. That's a sign. Second one is waiting for the trend to end instead of capitalizing. Now, part of this is hard if you're not a longer and you see an uptrend. You don't have to, but if you're a short seller and you see a downtrend, if you're a short seller, see a downtrend, and you're waiting for that trend to end instead of capitalizing, like something's, that's a sign of the too much distrust. And a third one is being so fearful that the moment you participate, it's over. And that's a toxic thing, right? That's where, if you're in that mindset, you need to get out of that mindset. That's the mindset that will cripple you long-term. When you just internalize that. When you're so fearful that you think that, oh, it's an uptrend, but guarantee the moment I buy it, it's going to be over. That needs to stop. Like, I mean, literally point blank, if you're in that kind of mindset, you have to today, after this webinar, tomorrow, when you wake up, say, no, the next time I see an uptrend, I'm buying it. I don't care if I lose. You have to say that. Like the next time I see a stock that fits my criteria for an uptrend or a downtrend, I'm shorting it, buying it no matter what. I don't care if I lose. I like watch it. I hope I fucking lose on it, but I'm fucking buying it. I hope I lose because then I can laugh about it, but I have to fucking do it. Like you have to get yourself out of that. But anyway, like I was saying before, the entire trading population likes to piggyback, right? Everybody likes to be a part of what they just saw. And this is why things go further than you think. Things will always go further than you think because there's, honestly, quite simply, there's more traders in the world than you think. There really is. Like we are so locked into, like we're in a trading community, we're on Twitter, blah, blah, blah. The majority of traders are not on Twitter. The majority of think about that. That might blow your mind. The majority of traders are not on Twitter, but like you just think that like Twitter is this vast, FinTwit is this vast community of a whole lot of traders. It is probably 1% of all the traders in the world. This is why things always go further than you think. There's just more participants, more people that need to piggyback, more people that waited and waited and waited and then finally get in, and then waited and waited and then finally get in, right? There's just so much more of that than you think about in the moment. Everyone wants to be a part of what they just saw. You have to judge how early you are. And this is why I talked about in the Catalyst webinar, right? One of my favorite longs is when there's a catalyst where I can say, I bet people will be hearing about this for the first time tomorrow or the next day. I'm a day trader. I'm sitting in front of my computer right now. I see news come out, and I think that this news is something that, like, I guarantee, like, my friends might talk about this tomorrow, or anyone who's getting into trading might be, oh, have you heard about this one? Like, this one ran yesterday. If it's going to be in play tomorrow, I'm buying it today. You know, that's my favorite long, is when I think that this news, you know, it's possible that this news might be heard about by someone not sitting in front of their fucking trading desk eyeing news all day. So that's my favorite long. So that's the first simple lesson. And yeah, continuation on that. This is just a little checklist I wanted to make for you guys. Whenever you're debating on these are all the trades and the situations, like active technical situations where you might want to jump in front of the gun or be that kind of hero. When you're debating on whether to take one of these kinds of trades or not, if you're debating like being first in general, like an example is someone asked about that, like WVVI, like, why didn't you buy that there? Well, I would have been like being first. I would have been trying to be first on that kind of trade. And like, it wasn't proven that it was going to break back over, but I was trying to be first, right? I was trying to be first on that kind of trade. So whenever you're debating whether or not to take, you know, a being first kind of trade, anticipating a reversal of an uptrend or a parabolic kind of trade, knife catching, you know, a washout or shorting a parabolic, or even buying a breakout like on WVVI, right? Like buying that right there. Whenever you're debating taking one of those kind of trades, you got to ask these calculation questions. And I do this every day. You know, what's my risk for reward, right? Factor in and when you ask yourself that question, you have to factor in the probability of being immediately correct. That is a huge component of, when you ask yourself what the risk to reward is here, because you always have to judge risk to reward and probability, right? It's a multiplicative factor. Risk to reward times probability is your expected market return. And so, you know, over the long run. And so if the probability of being immediately correct is high, you're much more likely to take the trade. You can accept a lower risk or a higher risk to reward ratio, but we always mean it the other way, right? Like high risk to reward, we always think is good. But what I mean is like a good risk to reward ratio, right? You can, the more probability you have of being immediately correct, you know, means that the poorer risk to reward you can accept. You know what I'm saying? And so you also have to factor in if it's a line trade, if applicable. Factor in the strength of the line. If it's a solid daily line, it might, you the risk to reward might not be that great, but if the strength of the line is really good, meaning the probability of this daily line working is really good, you might take it anyway. So you always ask yourself those calculation questions of the risk to reward is, what's the risk to reward, and what's the probability, what's my probability of being immediately correct, and how well do I like the setup or the line, blah, blah, blah. The second question is, what's the risk to reward of the alternative, right? Of not taking the trade, of what's the risk to reward of waiting, of what's the risk to reward if I decide not to buy the breakout and instead to buy the first dip after the breakout? What's likely going to be my entry, right? Like if I wait for the dip after the breakout compared to buying before the breakout, how necessary is that transaction, right? Like, is game over when we break out? Is there a chance that it's fucking game over, right? Like you have to, that's this factor in the probability of a non-entry, right? What's the probability that you don't even get an order? Like if it breaks, that's fucking it. It's all over from here. Like I'm not even going to get a dip, right? And word of caution, this is an answer where FOMO is going to say, no, it's going to go to the moon. No, it's going to go to the moon. No, it's going to go to the moon. Or if I don't short it now, it's going to tank without me, right? This is an answer where you really have to be careful of FOMO stepping in and answering the question for you. But you want to factor in the probability of not getting an entry if you don't buy here. And if that entry is low, like on WVVI, I did not buy that breakout because I figured if it was going to break out, I'd probably get a solid dip because this market loves to fucking reject breakouts. So if it was going to break over, I figured in this market, if it did break, whatever it was, 15 or 16 or something, that we'd go at 16, 16.50, come back down to probably 15.90 because it's probably going to be an asshole. And I'd probably get that dip instead. And now I have a much safer trade at the same price. And so, my risk to reward might have suffered a little bit, but not enough, not enough to warrant taking the trade before the confirmation. So this is like kind of like my thought process that I go through whenever I'm considering anticipating a little bit or easing it. And sometimes if I'm, this is literally the calculation steps that I go through when I'm like, do I want to put a little bit on here? Do I want to ease in? Do I just want to fucking just take the full trade here, accept the lower probability of the trade, but I'm going to just take the risk to reward here, right? These are the steps that I go through. Let's see here. Second simple lesson. Oh man, I'm okay on time. I've been watching this movie nonstop. I love fucking Warrior. Warrior is one of my favorite movies to get me fucking hyped for training. Anyway, never be afraid, right? If I could go back and tell myself something, it would just be to never be afraid because I was overly afraid as a beginner. But I don't know if that's even avoidable, but it's gonna be a long journey if you're afraid of the market. Like it's like being a surfer. You're gonna struggle as a surfer if you're afraid of the water. That's kind of just the way it is. You can't be afraid of the water. You can't be afraid to get wet and be a surfer, right? You can't be afraid of the market. You can't be afraid of losing money. You can't be afraid to put your money where your mouth is if you want to be a trader. And that's just point blank. That's end of sentence. Like, only the people who have conquered these kinds of fears can proceed in the business. And some traders start out with no fear and then they get PTSD over, either a bad red trade or a bad red streak or, a massive hit, account blow up, a bleed to death, whatever it is. And therefore, and here's the problem that it's okay to it's okay to do that. It's not okay to be forever changed. It's okay to get changed. I mean, that's so normal. Like you're going to have that PTSD, but it's not okay to stay that way. Like you have to get over it. You have to get back to where you were. That not fearless isn't the right word, and I almost put that word in here. You don't want to be fearless, but you can't have the level of fear that you attain after your first losing streak, which some people, if you're forever changed in that way, you're going to forever be unable to execute, and that just won't do, right? So never be afraid to put on a trade you have an idea for. And this is just a rule. Like if I could go back and tell myself this, I would say, never be afraid to you have an idea, fucking trade it. just trade it. It doesn't matter how big you trade it, just trade it. You have any idea at all? Any idea? I mean, not just like, hey, I think, hey, let's buy GME. It's an idea. Not something like that. You have a legitimate trade idea. You have an idea, trade it. It's a fleeting idea, like, oh, it's just a fancy, like maybe. Then put an inconsequent. Just get the trading. Just fucking trade it. Like if it's a legitimate idea, just fucking trade it. Right? Don't live in the worlds of I think and maybe and what ifs. Right? Don't live in that sphere. Right? Never be afraid to put it on a trade, because if you do, you're gonna be giving up valuable learning experience. Right? The more trades you take, you're going to learn more. And so, yeah, worst case, you learn a lesson. And so every new trader has this, what I call this backlog of ideas gone to waste, or like, oh, it was on my watch list and I was going to do it. And I just watched it and it worked out fine, blah, blah, blah. And funny enough is you ask every new trader and all of their would-be trades would have been green. Like all of them, fucking all of them would have been green. And here's the thing. You always remember the ones that you missed. You never remember the ones that didn't work out. You just don't remember them. They're just unmemorable. But you always remember the ones that you could have, would have, should have taken, right? Always. And that's just because we're biased people. We're biased towards our own success. And so you need to take these trades so you can build a record of them, right? Because this will very oftentimes humble you. Like, maybe I do need to learn something more. And it keeps you from living in the what if. And here's the thing. The reason why this is important, the reason why you kind of need to be humbled and not have this journal of almost taken trades, is because when you have a journal of really taken trades as opposed to almost taken, your almost taken trades is always going to be more favorable than the real taken trades. And you need this humility, because what this humility does is when you take a loss, when you are trading and you do take a loss, one, you've taken a few more losses and you've learned to cope with it. And you've learned that it's not just the one that you try, right, that doesn't work. Because when you have this backlog of ideas that everyone works, but the one a trade I take, sure, it doesn't work. No, that's not really true. Because if you would have taken all of your ideas, you would have learned that not every one of your ideas works, and that you actually have some more to learn. See, whenever you stay in the realm of coulda, woulda, shoulda, your learning has stopped. I coulda, woulda taken the trade, because if I would have taken the trade, I would have made money, and my ideas do work, but I just don't take them. When you're in that sphere, you can't possibly learn, because you already thought that your trade would have worked. You already thought that you would have made money, and that you do have a winning formula in your back pocket. You're just too afraid to take it, right? When you have that mindset, nobody is there to tell you that you're wrong. The market is not there to tell you that you might be wrong. And God forbid you are wrong, you can improve from that. But you can't improve from that if you don't take the trade. And that's, you're giving up the valuable confidence on these winners and the lessons on the losers and the improvements on the almosts, right? These are all the things you give up when you don't take the trade because you're fucking afraid to lose money. God forbid you buy it with 50 shares. God forbid, take the fucking trade, build a fucking journal of trades taken, build that ledger of lessons. And that's how you get better. You're not going to improve if you're trying so hard to figure it out, trying to figure it out before you take the trade. So, and here's the thing. You don't have to take these trades with big size. You can take them with small size. You can take them with inconsequential size. But here's the cool thing, is that small trades can turn into big trades too. Like they can turn into, like you can initiate a trade and be like, I'm going to trade 100 shares here. And that 100 shares could, first of all, it could halt up and open up $2 higher. Fuck, who knows? It could happen. But if you don't take the shares, that can't happen, right? That can't fucking happen. You don't have the possibility of having a big winner, which I talked about in another webinar, an old one, for how important that is. It can't happen. But a small trade can turn into a big trade with luck. It could turn into a big trade with patience. You could just say, well, I only have 100 shares. Let me just trail it and see how high it goes or see how low it goes. You can trail it, or you can add to it, whether you add to a winner or not. But most of the time, or a lot of the time, it's going to be because you started small and you added to a winner. And that, I mean, a small trade can turn into a big trade. But here's the thing: if you're waiting for that perfect moment, and then the perfect moment doesn't exist, and so it doesn't come, and you don't take the trade, not only like are you now in a coulda, woulda, shoulda, I didn't learn anything mentality, that you don't even know you're in, but you don't have the possibility of the chance where you took 100 and then you added 100 and then you added 100 and then you added 100 more. All of a sudden you're in 400 or 500 shares and you're up 50, 60 cents a share, or $1, and you have a solid win, like maybe your biggest win ever. And it all started because you put on 100 shares because you weren't afraid. Like, that's literally how it happens, right? Small steps lead to bigger ones. And so the more you trade in your head, right, then the more that becomes your trading reality, right? The farther away you are from conquering your fear, right? The more you trade in your head, the farther away you are from conquering that fear and accepting the risk of trading, right? You need to take these small steps. And just one other thing I want to say is sometimes my content on these slides do have prerequisite ideas that I don't state because, like, I'll introduce a concept like this, and like what I want you to do is to go through the motions and go through, like, okay, I'm going to not be afraid. Well, see, the not stated thing is, how do I not be afraid? How do I just take that trade? Well, the prerequisite might be, maybe I can't just take a trade, because if I take all of my trades on the 1,000 share size I've been trading, there's a big possibility that I'll go broke. And maybe that's the underlying concept. Maybe trading the 1,000 shares is really the problem, when you can really only stomach 200 shares or 300 or 400 or 500. And in order to take every idea that you have, in order to not make them coulda, woulda, shouldas, but to make them did, won, lost, learned, right? In order to transform it into that and then grow and progress over time, that prerequisite that I didn't state on this slide may be that you need to change your share size from risking $300 a trade to risking $100 a trade, right? Maybe that's the change that you need to do in order to take this never be afraid. So just in general, there are some things that I'm not going to put on the slide, but you'll probably go through if you tackle the concept. And I just wanted to point that out, because I thought about putting that on this slide, but I said I put that on enough slides in the past, so I'll keep that one out. Yep. Forget everything and run, or face everything and rise. Yep. And the third simple lesson is getting, I love that picture. Getting mad at your losses. Like, so, and I don't know I honestly don't know if this can be achieved or not without time, but I'm guessing it can be, just off of some assumptions. But it's definitely a maturity milestone that is reached, that needs to be reached, I think. And maturity, of course, normally comes with time, right? That's the assumption. But it can also come with discipline, because, like, with when you see kids with single parents, they're often, not all the time, but sometimes they go the other way. But often, the ones with discipline, right? The ones with discipline get really mature really fast, right? If you have a single parent, because they kind of, they're more on their own and they have to learn this kind of thing. That's kind of like a trader. You have no parents. You're an orphan in the market, so you have to kind of gain that maturity yourself. So, the ability to not get mad at your losses is such an important milestone, because it's a step, in climbing this mountain called the acceptance of risk, right? And I've talked about this before, but it's the most important milestone you have to reach, is the acceptance of risk. But an important milestone along that road is not getting mad at your losses. And it's like you can accept risk before you stop getting mad at your losses, or you can get mad at your losses before. I'm not saying that one is necessarily causing the other, like one has to come before the other, but they're definitely related, and they go hand in hand. Getting mad at your losses is such unnecessary emotion that's unavoidable to some extent when you first start. But the thing is, once it happens, it's over, and there's nothing you can do about it. And when you just get mad, you really, it's so toxic is the word. It's just when you like cursing at your screen. Like if you're in the state right now of cussing at your screens, I'm telling you right now, and not playful, not like, oh, fuck off, like something like that, or like, oh, that's fucking bullshit, or Jesus Christ, like, are you fucking shitting me? Like, just any kind of like, or jokes, any kind of lighthearted, just not screaming at your computer screen kind of cussing. If you're in any kind of the heavy kind of cussing at your screens, you are like, I'm telling you right now that you are not, that's not the mindset that you can be in to be like successful. Like you need to have this. I mean, it's okay to get mad at like yourself, at dumb things you do. Like that's okay to cuss at yourself at, but to cuss at like sheer results when you've done everything right, like getting mad at yourself and getting mad at the stock are different, but we often do them together. Like oftentimes we're mad at ourselves and we blame the stock. It's so okay to be fucking pissed at yourself, but it's not okay to be pissed at the market. And this is where, that's when it starts to get toxic. And when you start like cussing out the market, one, you probably need to leave on the day, but two, you probably need to reassess coming into tomorrow. Like you can't do, especially, and a lot of times, like you go through these periods where you're just cussing every day, where everything is just fucking, you're just so mad at everything every day. And when you're trading mad, you're not having a good time and you're not going to win. Like when you're on a great, when you're trading well, you're fucking stoked and positive and having a great time. And it's like I write on here, it's not overnight. It's not, it's going to take hours, days, years, right? Sweat, tears, pit and recovery. It's going to take that kind of journey to come to this level of maturity. But if I could go back in time, and I would tell myself, don't get mad at my losses, right? Like the other side of the fence that you is this numbness to your loss. And it's not like ignorance. It's not, oh, well, I just lost 10 grand. Like, yeah, that's fine. It's not like that dog meme where the house is on fire and he's just drinking his coffee. It's just a numbness. It's, oh, that's a loss. Like, that's okay. Like, what did I do wrong? Like, yeah, I knew it. Like, you have to treat trading as if it's not on your sleeve, which is very hard because most people are super passionate about it. And this is where it's hard to be so passionate about something that you can't have on your sleeve. You can't have your heart on your sleeve, even though trading is your heart. That's why this game is so hard. But you can stop by getting into, like, because you hype yourself up when you do this. When you just go fucking berserk at your computer and just like slam shit, like you are just exacerbating the problem. And I know it's really hard to just say, well, yeah, I guess I'd just be okay with it. But here's the reason why you're doing this is because you're internalizing this. You're making the market. Yeah, Akilo brings up a great point right there. What you're doing is you are personalizing everything. You are like, if you stop out and then it tanks, fuck, like that's bullshit. Like fucking, like I knew this stock would do this. Like I knew this stock, like all this internalization, this personal, like the market is out to get you, right? If you try 3 times, an example, you try 3 times, but then the 4th time it works, you're like, oh my God, it just waited for me not to do that. Whenever you start to like personalize the market, like the market's out to get you and you're so mad and it's just like, you're, that blame game kind of mentality, you are just wrecking yourself, right? And so, and another one is like, if you don't stop and this is probably the worst one, is when you don't stop and you're like, no, I'm not going to stop. And then no, because it keeps stopping. It's going to stop me out at the bottom. And you don't stop and you don't stop and you don't stop and you don't stop. And you're like, fuck, fine. And then you stop and then it's the bottom. It's so hard not to take that personally, but it's not. It's so not. Like, it's so fucking not. When I look back at all of the screaming fits that I had where I would just be like just so not really, but in the moment, you're just so convinced that it was just so out to get you. Like it was just so on purpose. And you would that just inflamed you even more. And anger is an emotion, right? And that's one of the shit that you have to cut. And so if I could go back and tell myself in the beginning, I would just say, when you get mad, let it go. Like you just have to just let it go. You know, it hurts, it stings, it doesn't end the stinging, but you can end. Just how you react to it is going to change how fast you get over it. And you know what? This is what's great about having a tab. If you have a tab, you can vent to your tab. And I mean, it's your tab's job to fucking make jokes and make it funny. Yeah, when you're losing, make it fucking funny. Like, you know, like when my tabs and we have bad trades, like we fucking laugh at each other as fucked up as that sounds. We fucking laugh at each other. We say, you fucking, or like I'll be like, I lost. I know you're happy because you always root for me to lose, blah, blah, blah. Like, I don't know. Like it just that you need to have a tab. You need to have a rapport with your tab where you make lightheartedness of like having a lighthearted mentality towards your losses is going to protect your mindset and prevent you from spiraling downwards, which is really what you need to avoid. A loss is fine. A spiral downward is not, right? You can overcome a loss like that. You can't overcome a spiral like that. So it's very like, I mean, that's, I mean, you need to have a support system there, right? Like a tab really helps with that. Like to just try to, I mean, not make losing fun, but like make losing fun in a sense. Like fucking your tab, you know, your tab has a loss, fucking find the perfect meme. Like, you know, and you know, they'll do that for you. And that helps. And so I think that's, you know, yeah. One more thing. Oh yeah. I wanted to post a video here. This is a funny little video here. Let's see here. Oh god, that I tried to get it on here, but it just wouldn't embed right. So anyway, but yeah, there are often times, and I did that this week, there are often times where I stop out and I hope it goes in my direction. Like really, there are times when I know that sounds fucked up, but like there are times where I'll stop out and I'll be like, well, my trade's over. Like, yeah, it just didn't do it the way I wanted it to. My trade's over. I still hope it goes up. Like, especially like in this market, I might take a long on something and I might lose. And I might be unwilling to buy it again, but still I want it to go up because I want my idea to have been right. I would rather, right. And like, I didn't get mad at I would rather my idea be right and have me fucked up. Like, oh, I just fucked up on it. But at least my idea was right, right? I would rather that happen than, you know, than like be mad that it stopped me out and then went in my direction. Yeah, that's always annoying as a trader. But seriously, like I would rather just be right. Like, dude, at least I was on the right track. Like that makes me feel like at least I was on the right track on my loss. I just kind of, you know, I fucked up. I was a little too early. I was a little too late. Whatever it is, like, or if I don't take a trade, I'm like, oh, fuck, I missed my opportunity and I missed the entry. I still hope it goes up because I wanted to buy it and I want to see what I would have made. Like, I want to see my trade work. I also, in this market, like, even though I don't make money on the stock, I want to see a stock go up. Jesus Christ. Even though I lost, I'm not going to be like, oh, fuck, now look, fuck, it went up without me. That would be me internalizing, making it personal, and that would be a road down the toxic path. So, I know, I just thought that might be a little, you know, sounds weird, but yeah, like sometimes after I stop out, I hope I'm right later. Anyway, I'm going to end the webinar here. Thanks for coming. I'm just going to make sure the recording locks in. And yeah, that's it. That's all I got.